Thank you, everybody. Hopefully the stablecoin stack is a little bit more clear. Next up, we're going to jump into real-world stablecoin use cases. Business use cases, consumer use cases. What are stablecoins being used for today in ways that are having high impacts on consumers and companies alike? So I want to invite Akit from Actual, the ARAP platform. I want to invite Arjun from Mesh, which is some of the infrastructure behind Shift4 and a lot of big PSPs that are accepting stablecoin payments today. I want to invite Horatio from Paxos, which is in the issuer consortium of USDG, is the issuer behind PayPal's PYUSD, is at the center of a lot of these B2B flows. I'm going to invite myself. And then for those of you who on the first panel were thinking, wow, CJ is a phenomenal moderator, and I would love to have a lot more of CJ, I have even better news for you. CJ's better half, Pat, is going to be moderating.
Thank you, Kevin. I'm definitely not the better half, though. Sorry. Thank you, Kevin. I'm definitely not the better half, so bear with me here. But hello. What a beautiful day. Thank you all for being here. My name is Patrick Yang. As Kevin mentioned, I'm a co-founder and general partner at Amity Ventures, an early stage venture fund. Lucky to be partnered with Kevin at Borderless, the team at Core, and Sokir as well. So I'm very excited to be moderating this panel. Stablecoins are hot right now. Crypto is back. I'm feeling excited. But one thing that doubters always say is that there's not any real world applications of crypto. Yeah, stablecoins are one of the most used crypto products on the planet. So we have some of the foremost technologists and builders here that are driving adoption of stablecoins. And why don't we start with a quick round of introductions, tell us a bit about your company, and then walk us through one real customer use case you're serving today and why stablecoins are better than traditional legacy rails.
Do we want to start on that side?
Hey everyone, I'm Atik, one of the founders of Actual. Actual makes it easy for businesses and freelancers globally to pay and get paid the way they want. Stablecoins are fiat currencies direct to your wallet or bank account. And we let your counterparty do the same thing, so there doesn't always have to be like a match in what you pay and what you receive, so we can meet those differing preferences. We're built on top of sort of the emerging payment infrastructure stack, kind of the best of the orchestration tools for stablecoins, fiat currencies. But really what we do is we take that magic and try to layer on the more mission critical business component of accounts payable and receivables to work alongside that. Today, we're serving thousands of businesses in over 100 countries. Still a lot of work to do, but really love sort of the global usage of our product today. And I think it speaks volumes to just the need of something like this. Prior to this, I spent a bit of time working on financial operations at Stripe. So not my first rodeo. In terms of the use case example, one of the use cases that we see quite a bit on our platform is actually emerging market service providers. So these are, content agencies, marketing agencies, designers, design agencies, law firms, accounting firms, et cetera, in places where stablecoin adoption's growing for reasons we all know. But let's take someone like Anwan, who runs a marketing agency in Nigeria that we work with. And he's got a client in Maine, and that client is a real estate property management company that he does marketing for. Prior to using Actual, the way he would actually get paid by this company was he's got a friend in the UK that would kind of serve as the middleman to accept the PayPal payment, and then he would accept that payment, use another service to convert that GBP into NGN, and then send the NGN to him, and he was incurring over 5%, 6% in fees, and waiting upwards of 2 weeks to get paid. Whereas now, when he uses Actual, what he just tells us is, hey, this is the USDT Tron address that I want to accept payment into. And we say, great, here's a USD account that your client can send you payment for. And so what happens is within a day or so, the client makes the payment in the way that they expect. Traditional boomer company up in Maine that just sends money out of a bank account. And then he gets USDT. Same day, a lot less fees. And I think that's really the magic that this enables, and a lot more of the borderless commerce that I think can be really, really helpful for just bettering economies and getting more people involved globally.
Yeah, why don't I just say with you real quick. The last panel talked a lot about abstraction, and you gave a perfect example. The client on the other side doesn't know that they're actually you're using crypto under the hood to send crypto over to your customer. Talk us more about abstraction, how you thought about designing that into your product.
Yeah, for sure. We talk a lot about this idea of us needing to be Switzerland for this really to work. We have no attachment to any stablecoins, any wallets. So the way that it works in actual is that you just tell us the way you want to receive payment. If it's a bank account, if it's a particular wallet, we support it all. And the idea is that you tell us that method of payment that you want to accept. And what we do in the background is sort of generate a flexible payment account is what we call it in our system. But really what we look for is kind of what are all the possible routes that we can accept payment into for you? And then you ultimately get the thing that you want. And so it sort of flips like the WISE model on its head a little bit, where you typically would have to manage different multi-currency accounts. They exist purely for the purpose of your client to be able to pay you, and that's it. The moment the money hits that account, we on-ramp or off-ramp it, and then it gets to you the way that you want it, which we believe is the better product experience.
Very cool. Sorry, Arjun, go ahead.
All right. Thanks, everyone, for having me. I'm Arjun. I'm the CTO at Mesh. And a little bit about myself. My background includes some financial firms, like large institutions like Goldman Sachs. I spent some time at Coinbase as well, leading out exchange and payments engineering. So hopefully I'll be able to represent both sides of the equation, traditional finance, as well as what we're here to talk about today. Now about Mesh, we pride ourselves in being the connectivity layer for crypto. What does that mean? Within the Web3 ecosystem, you have multiple different players. You have exchanges, dApps, DEXs, wallets, self-custody wallets, smart contracts. Now, we figured out the most efficient way to connect any two points. And if you can connect 2 points, you can route information effectively between them. That's a long, bad way to say we're really good at payments. Right. So I'll keep it cliched but relatable, which is Mesh actually wants to bring your day-to-day crypto payments to your coffee shop, to your Shack 15, to my coffee shop down at Castro, right? And we want to do this because we want to solve some of the fundamental problems. Some of those fundamental problems are around fragmentation, right? Like we all know, like we have maybe 6 to 8 different accounts. You have a Binance account and a Coinbase account and an OKX account and a Rainbow wallet because Rainbow is suddenly cool. And then you have a MetaMask wallet, right? And within these, you have asset fragmentation. So you have account fragmentation, but then you have asset fragmentation. It's like not all your assets in stable coins. If they are, they're not in a stable coin, right? Unless you're really, you feel very strongly about a particular stable coin. And even if it was in, let's say, USDC, it's not all on Base or it's not all on Arbitrum. So there's network fragmentation. So we have account fragmentation, asset fragmentation, network fragmentation. Imagine as an end user who just wants to buy a cup of coffee is like, yeah, should I pay with my MetaMask account, with my USD, with on Base? And then you go into all of these permutations and combinations. So we at Mesh want to solve that problem of fragmentation. We want to be the ones that actually take crypto payments to day-to-day, everyday usage, right? Business payments, retail payments, right? Like some of the panel will probably talk about remittances, deal making in crypto, right? And there's obvious advantages there. Settlement speeds, 24/7. Costs, like you just talked about, right? So let's bring that on a day-to-day basis, right? Let's actually see that happen. We've been talking about crypto payments for how long? For maybe a decade now, right? We want to make that simple. We want to make that in everybody else's hands, right? So that's a little bit about Mesh. I'm sure we'll get into specifics.
I'll ask you one quick question. So you're building infrastructure to make stablecoins work seamlessly across hundreds of wallets, chains, and platforms. What's been the hardest technical challenge or user experience challenge in making that work?
So many. So here's when the Web3, when Satoshi launched Bitcoin, when the Web3 ecosystem evolved, everything was geared towards, in a crude way to put it, the developer. Right? It's like, imagine having to remember mnemonic phrases. Like, when was the last time you wanted to go use $2 and you was like, what's your 12-word mnemonic phrase? It's like, no, you don't have to do that, right? So just to go back to your question, one of the biggest problems we've had to solve for is that pull push between security and UX. how do you provide a seamless payment, day-to-day payment solution without sacrificing without sacrificing security, right? How do you do that across different quote-unquote rails, exchanges, wallets, smart contracts, right? So how do you put together, in short, a payments network for crypto that honors seamless, secure, as well as honors interoperability? Like if I was talking about fragmentation before, the short term for fragmentation, the relatable term for fragmentation is interoperability, right? So yeah, from a technical perspective, I think not having a single standard across networks, across assets, across liquidity sources, that's been the most difficult thing to deal with, and that's where we provide value.
Thank you.
Cool.
Hey everyone, my name is Horacio Diaz. I lead the finance and regulatory team at Paxos. Paxos is a regulated infrastructure player for the digital asset space. We have two main businesses, an issuance business where we tokenize dollars and gold primarily. We're the issuers behind PayPal dollar, PYUSD, and we recently launched the global dollar, USDG, together with Anchorage, Robinhood, Kraken, and several other players. On the platform side, we have a embedded finance type platform that you can use for yourself directly or your customers to buy, sell, hold, transfer digital assets. We power players like Stripe on their merchant payments solution, folks like Sling for their consumer business, players like PayPal where they leverage our platform for crypto brokerage. So broad set of use cases against a regulated digital assets infrastructure that we provide.
What do you think really differentiates a high integrity or high quality stablecoin? A stablecoin that people can trust, enterprises can rely on?
Well, you need to look through at the whole spectrum of qualities of a stablecoin. Many folks are very focused on the reserve management, and I think that tends to be an important component that obviously that's the reason why we use them. We want them to be one-to-one at all times. And I would say there are a few layers I look into that. So one is what type of assets and what's a mix of assets. It's not just T-bills and repo and this and that, but if you're holding 10, 15% of your deposits in a bank, well, that's a lot of bank risk exposure that you're having, likely above FDIC insurance. Who are the bank counterparties and the custodians on the other side? What type of transparency do you have? That's critical in my mind. And then finally, I'd say, what's the regulatory oversight? It's easy to do the hard things when times are good. It's hard to do the hard things when times are very tough. And that's when oversight from a regulator, I think, is quite critical.
Thank you for that.
Hey, I'm Kevin. I have the privilege of leading the team at Borderless.xyz. I think Bree did probably a pretty good job on the last panel of kind of introducing what Borderless.xyz is, but to kind of reframe it into the way that I like to think about it is actually a great combination of what was originally said in a few different ways as kind of defragmentation and abstraction. So right now, money movement is incredibly global, but regulatory frameworks and banking rails are extremely fragmented and local. And part of what we saw when we decided to start Borderless was the rise of what we called stablecoin-enabled financial institutions. So now we refer to them as PFIs on the Borderless network, but this is companies like Bridge that's built phenomenal orchestration products in the US, companies like Yellow Card that have done the same in Africa, companies like Bitso that have done this in parts of LATAM, companies like Trace that have done this amazingly well in Brazil, kind of a lot of the folks that were up here on the geographies panel. And we see this across the world, right? I wish we could have brought 50 different people on stage to talk about the nuances of each of the countries in which they operate. And what we realized was missing and that we wanted to solve for was some sort of a global network that weaves all of these different counterparties together into a single place. And a lot of our customers are network members. And what that means is that they have a license in some jurisdiction. So call it that they have a license in the US, they're under NYDFS, or they've got a bunch of MTLs or something like that, and they want to bring to market a cross-border payments product. In order to do that, they're going to need to tie into Trace in Brazil. They're going to need to tie into Iron in the EU. They're going to need to go and tie into Bitso in Argentina. They're going to need to tie into Kappa in Mexico, et cetera, et cetera. You can imagine how this starts to scale in complexity as you start to support more and more different global corridors. Or as an alternative, they can tie into a network like Borderless, which is already connected to all of these different financial institutions. And now in one platform, in one API, in kind of one network, you can access regulated counterparties across the world to do the other leg of the transaction. And that's a lot of what we've built. For those of you that are in the stablecoin space, you've probably heard of Circle's announcement of the Circle Payments Network last week, which was phenomenally validating for us. At least in the stablecoin space, we've had to explain what is a stablecoin network and why is it valuable? Is it another blockchain? Is it another token? What is it? What layer does it play in? Now we get to say that we are the Switzerland version of CPN, where we don't believe that it's a winner-take-all market. We believe in supporting USDC. We believe in supporting USDT. We believe in supporting PYUSD. We believe in supporting all these other stablecoins that are coming out. And we think there needs to be the network that ends up winning needs to be a credible third party versus issuer-driven or wallet-driven or any particular piece of the stack. We think this is its own credibly neutral layer.
Thank you for that. Stablecoin settlement is obviously fast and nearly free, but most money still starts and ends in fiat. You're building kind of the connectors, you're solving the fragmentation, but under the hood, what does that lift look like to connect to all these on and off ramps across global bank accounts?
It's a lot of connectivity, and it's a lot of messaging. And I think depending on the jurisdiction that you're looking for, something that's really important to consider is the counterparty risk. So when we think about this from a US-centric position, we can all kind of argue that the regulations here have been unclear and that like the SEC kind of regulation by enforcement has really harmed the blockchain industry as a whole. But the reality is that we still have a ridiculously strong regulatory framework here, right? Like if we end up using Bridge or Paxos or one of the entities that's regulated in the US in some way, shape, or form, there's a significant level of trust that you inherently have. When you start to apply this, and I don't mean to pick on any particular country, I know we've got a bunch of folks in the live stream that will probably want to cancel me if I pick their country, but when you apply this into like Nigeria, or you apply this into Panama, or some of these other more emerging markets, the regulatory framework just isn't the same quality. And we see a lot more corruption, we see a lot more licensing through bribery, we see a lot more of those things. And there's a lot of abstraction that happens in the payments world where you connect to somebody who connects to someone else. I think Bernardo talked about this, where you're connecting to someone who connects to someone who connects to someone who connects to a broker who connects to someone. And when you don't understand who the underlying counterparty is that's processing that transaction, how on earth are you supposed to quantify the counterparty risk of the transaction and of transacting with that particular party? So a lot of the difficulties of what we've done is to try to peel back a lot of these different layers and work with the people who are powering these other players and bring them onto the network directly. So you have these bare metal providers and you have the opportunity to select who you want to work with and who you want to enable and disable so that you can actually manage your counterparty risk in a way that's not typically possible.
Thank you for that. So this one's for each of you to answer. What's one hyped use case where stablecoins do not work well yet? Why not? And do you think they will in the future? And what's the key unlock?
Yeah, I had to think about this one, but I think the idea of a global Venmo, and maybe the nuance is the like application part of it. But I think about the way I use Venmo, right? It's like I send some money to my friend for lunch that he just covered. But then if I think about the use case of like sending money to my aunt in Somalia, I think that's a completely different workflow where she's expecting to go to her local Hawala shop to pick that up, or ideally get it in like a mobile money wallet. Why should she need to download another app? Why does it need to feel social? Yeah.
This is going to sound a little counterintuitive. I was talking about payments. I actually don't think stablecoins are ready for payments yet, or payments are ready for stablecoins yet. In today's world where we are, like when was it like, we are all in crypto, each of us, right? And we're probably holders, right? When was the last time you walked into a store and just used it to pay, right? The last time I used it was either because I was forced to, I was buying some mining equipment and they would only allow crypto, or I forced them to. I went down to my coffee shop and installed a POS terminal that I built with an engineer over the weekend, right? So like there wasn't a vanilla use case for this. right? So stablecoins emerge as a subclass over the last few years. But like, if I go back to fragmentation, right, like if you have USDC on your MetaMask on base and the merchant wants to accept PyUSD, you're done, right? That payment ends right there, right? So like we're talking about retail payments. Now this problem magnified for business payments, right? Like my colleagues here talked about business payments quite a bit, remittances, right? Same situation. Now everyone, the receivers, the last mile is very opinionated about what kind of crypto they want, the amount of risk and their risk appetite, right? Things are not changing in terms of risk and risk appetite, so we need to adapt, right? So I do think it's not ready for payments yet, but that's why we build Mesh Pay with a very particular focus on let's give the end users the last mile, let's satisfy that. Let's abstract away the network complexities. Like, let's not worry about what a network is even, right? If you have value, you can transact, and that value can exist in any form, and you will transact in a way which the merchant gets to realize the benefits of instant, quick, cheap settlement, and everything else let Mesh take care of. So yeah, it's a little counterintuitive, but I do think stablecoin doesn't yet, crypto doesn't yet, and stablecoin doesn't yet solve the problem of payments, retail or business, but it's one of the best solutions we have in terms of getting there, but we are not there yet.
Thank you.
I think I mentioned I run our finance team, so I have a pretty good view on how we pay. And it's somewhat embarrassing for being a stablecoin issuer how little of our money actually moves in stablecoins. On the one side, a positive anecdote, earlier this year we bought a company, not too exotic, this was in Finland. We tried to pay via bank twice, it both failed. We ended up paying via stablecoins, so that was great. But of our vendors, we basically don't pay a single vendor unless it's an exchange in stablecoins. We'd love to get them to adopt stablecoins, but stablecoins is not integrated in our procure to pay tool. And if I ask my team to pay in stablecoins, they hate it. It's way more work than just someone pressing approve in Coupa and it's done. They don't have to think about it again. It's integrated into NetSuite all the way. We've now just decided to change our procurement tool to go to Zip and ask them as part of that for them to implement stablecoin payments so we can pay every single one of our vendors in stablecoins. But the UX and UI today, it's just not there.
For the record, you paid for your sponsorship of Stable, not in stable coins. So I think that's a great example of what you were just talking about. I was going to say like consumer to merchant payments, but you already hit on that. I think there's a great narrative, which sounds good in practice of, oh, stable coins are going to upend this 3%, card processing fee, things of that nature. The vast majority of that isn't a settlement cost. The vast majority that goes into, cashback, airline miles, rewards programs, the whole consumer behavior, you have to retrain for that, which I think people don't think about too often. But I'll pick a sub case because a lot of what we do is cross-border remittances. And I would say it makes sense in emerging markets. And we see a lot of volumes between like the US and LATAM and Africa and those markets. But stablecoins today in general make no sense between like the US and like major cities in Europe. USD to euro is one of the most traded FX pairs in traditional kind of FX brokerage. The spreads on that are incredibly thin. The costs of holding float in USD and in euro, like there's very little currency risk compared to holding float in BRL or in Colombian pesos or in Nigerian naira, things of that nature. So I think even in cross-border remittance, which is one of the best use cases of stablecoins today, it's really corridor dependent where it actually makes sense and is better, faster, cheaper. Or other corridors, certainly it's still cheaper, but SWIFT is still T0 in some corridors, doesn't speed it up that much. It's not cheaper in euros, things of that nature.
All right, I think we're coming up on time, so let's do a lightning round. One word answers only, don't overthink it.
God.
Biggest growth market in 2025?
Remittances.
Well, you use payments. Obvious answer.
Exporters, B2B payments.
I like the shelling here. Number one blocker to broader adoption? of stablecoins? Number one blocker for broader adoption of stablecoins?
Regulatory policy.
Agree to that one, but I'll add integration into workflow tools and teams that leverage pay every day.
Fragmentation.
Yep, echo that process.
The year stablecoin disappears from marketing copy.
2030.
-2, 2028.
The concept of stablecoins probably in a few years, but the vehicle itself, it's here forever.
Yeah, I don't think it goes away.
When should business leaders start seriously integrating stablecoins?
Today.
When should business leaders seriously start implementing stablecoins?
Business leader?
Leaders.
When should business leaders start implementing? Yeah. I mean, if you haven't already, just the same argument with AI. I had to say the two-letter acronym. If you haven't already, you're behind the ball, right? There are businesses that are reaping the benefits that you're behind on, and so if you haven't already, yesterday.
I don't have a one word for this, but if it's costing you deals and if you could benefit from time saving or cost savings.
Well, please give a round of applause to our panelists. Thank you, guys.